Good evening, everybody. Welcome to the old the channel on such a glorious pumping day. We are looking to continue to make new all-time highs for Bitcoin, but are we? At what point is it going to pull back? That's the main question. Anyway, I just want to remind you to subscribe to the channel. I've literally just made it over 20,000 subscribers. It's taken ages. I've just been, the whole bear market sort of peaked around, 19,000. Finally made it to 20,000, so thank you for that. If you're not subscribed, subscribe to me now. That'd be lovely. Other than that, let's get stuck in then, shall we? So Bitcoin basically making its way towards that $100,000. Now, 97 to me has always been a bit of a target based on the Bollinger Band of the weekly being completely overexposed, and we've born outside the candles, born outside the band again and again this week. So it does invite a pullback. The first target based on a weekly is going to be 76,500. That's also the top of this box. Okay, so that is a genuine possibility. We don't have any bearish divergence on this weekly, so we're not looking for a bear market. Let's just remind yourself of that. We're not going to go into a bear market. Okay, so if we are going to pull back from here, or thereabouts, the consolidation is probably going to be very short. So the way to think about this is that when did Bitcoin finally break out and go bullish? It was roughly around here, around the 19,000. Once the 20 moving averages was reclaimed and then retested over here. So we spent recently about 371 days trending up from breaking bullish, and then from the peak down to the low down here where we actually hit the low, it's around about 175 days, right? So half the time it took to run up, it took to consolidate. It doesn't feel like that. It feels like we've been consolidating for a long time, but that's because we've been spoiled, because we bought these lows and we were enjoying this, we were loving life. And then we were very sort of, we were clever, I suppose, if you want to call it that. But we knew that the consolidation was very likely to happen over this year. And we exited positions and we dollar cost averaged on the way down. And we had a good time. Now we've broken out. Everything's breaking out. Everything's going crazy. The total two's broken out, massively broken out, all the way to the top trend line here. And so it looks like we're pushing a resistance at this point now. So a consolidation on the total two, at least, as well, is required, I would say, to take place from here. But based on that overall idea of time, so 300 odd days here, 175 days here, you'd be looking for half the time it took for us to break out. So where we're going to measure the breakout from? We're going to measure it from here because that is genuine. So we've got 35 days so far. You could measure it from the low down here if you wanted to, and that's 77 days. So you'd be looking for around 2 to 3 maybe weeks to pull back into wherever it is that we're going to go. We might be looking for around this sort of period if we're going to do it. And that would mean that you got until Christmas, into December to see a pullback. It's also worth noting that you normally do get pullbacks during that period as well. In the UK, our tax system is weird, just like everything we do is weird. But in America, it's tax season finishes at the end of the year. It makes perfect sense. And we'd have ours in April for some stupid reason. But the rest of the world, I imagine, do it normally. I'm sure there's a reason for it, but I don't understand. So what you'll see is, okay, look at it like this. We have enjoyed some rallies. Just recently, we have enjoyed some decent rallies. For stocks, since the bear market was in, oh my God, my Meta trade is up like 500%. It's not just crypto where the money is made. It's everywhere, all right? It's everywhere. And so with that comes time to take some chips off the table. You've had a great run. It's getting time to cash in, spend some money on yourself, spend some money on others and pay those taxes. And so, you'll see, I suppose, towards the end of December, or, the last couple of weeks into December, the sell's off and taxes are done, and then basically carries on from there. That makes sense from that perspective. Also makes sense from a technical analysis perspective. But we're not looking for a bear market. We're looking for a 2-3 week period of downtrend from the moment that the peak is in. Maybe we carry on for 2 months or so, but I find that very unlikely. So we're looking for a peak. Thinking about this on the daily, you got bearish divergence, only a little bit on the RSI, none on the money flow index. The money flow index is high, it's not massively high, it went to 91. Last time we saw these overheated reads were over here, where we saw this peak, and then we saw the bearish divergence, which marked the top. Other significant highs do mark little consolidations here, some consolidations here. You know, we can just backtest every time the money flow index reaches a peak, and you will see a small pullback. They look small, but you know, we zoom right in. You know, and you see these peaks, yeah, they are small, but they're also worth thinking about. So there was a peak down 8%, carried on, bearish divergence, and then went from 24 down to effectively 19.5. They don't sound much, but they are. So it's worth recognizing, all right, we're hot, we're high. We can go higher, we can create bearish divergence like we have on the RSI, but we can go higher. The 4-hourly does actually have the bearish divergence as well in place, so we are looking for this to pull back. And where would the main moving averages be on this? 200 exponentials around, well, just short of 80. 200 simple is down here at 76. Yeah, these are all targets. Targets to be moved into, and if you were to consolidate with this kind of trajectory, there's your 200 moving averages like this. Yeah, push. Okay, somewhere towards the end of this month, perhaps. Yeah, whoa, hey! Your guess is as good as mine, because despite you tuning in and watching me and me getting these trades right, you know, a reasonably, you know, enough to make money, let's just say. I'm not going to blow my own trumpet. I make mistakes. We all do. But, you know, for you to tune in and say, well, this guy says this is going to happen. I don't know. I'm very vocal about me not knowing. I don't know what's going to happen. Nobody knows. This is my interpretation of what I think is going to happen, and I think the most likely scenario is that we do have a pullback now, and it'll be a relatively large one. You know, reset that liquidity. You know, just drain the liquidity out. You know, take that profit, reset the futures funding rates, all this sort of stuff. Just wax it off, and then start again, build it up. And for altcoins, it can be obviously pretty nasty. A 10% pullback will be a 20% pullback on altcoins. And the dominance chart has not reached our main major target, which again, this is all part of my overall analysis. We're going to move up, break out, retest, and go up. I want you to remember that all of these little squiggles on these lines were all here way before the price action was. I'm not saying that this is definitely going to happen. Remember, I'm just a normal person. That's all I am, just a normal person. This is my expectation, and it seems to be playing out. Just like this, I'm a normal person here. This is my expectation. You know, that we were going to consolidate throughout here, and we were going to follow this timeline of this fractal overlaid and break out some point towards the end of this year. And there you have it. It's a 30% move from the breakout on the total too. Exactly as expected. I am still a normal person though. Just remember that. So I'm happy to say I don't know, but so far I've got it right on the big swings, and I'd be looking for this area right now, roughly, give or take, to be an area of pullback. But if your strategy is to hodl throughout the next year, then you really don't need to worry. You just have to have the emotional fortitude to sit back and go, oh well, portfolio's down 30 or 40% today, no big deal, because this time next year it'll be up about 500%. So it's just, you know, I can handle that. And that, I suppose, is that is the attitude to have for a hodler, because that's the one you need to have. I hodl and I trade, and you know, I've taken some chips off the table yesterday, and I'm still waiting for the lower entries for the altcoins that I love and want to continue buying and enjoying these big rips. So that is basically the deal. I'm looking for a pullback. I know it's unfortunate to say that, but from what exact level, I don't know. But the rough targets would remain the same. So if we go up to 100 or if we go up to 110, the target's currently still down into the 80s, maybe the 70s. So if we go to 100, 105, 110, 115, you're still looking for a pullback to be reunited with major moving averages, which currently they're sitting around in the 80,000s, perhaps maybe a little lower. So just remember that. Wherever Bitcoin falls from, altcoins will start to emphasize that move. So you do want to be a little cautious about how exposed you are, if, of course, you're trying to trade. And if you're hodling, just deal with it. I deal with it. I've got plenty to hodl. My portfolio fluctuates like a beast. So, you know, the idea is to not really think about it in terms of what it is on a day-to-day. You think about it what it is on a year-to-year. Next year is the big focus for those hodlers. So don't lock yourself into staking for a 12-month period right now. That'd be crazy. 3 months, 6 months, that's all right. Don't sign up for a 12-month staking program, because my expectation is it'll all be over this time next year. Right, thanks for watching. Hope you have a nice day. Thanks for the subscriptions. 20,000 subscribers now. Feel free to subscribe, like, share, comment, and join the Telegram and the Patreon. Take it easy.